Hello out there. This is Mitch Goldberg. You're watching Be the Boss of Your Money. I'd like to welcome you to the show. This is another live episode. We've got a couple of things to talk about. We've got a few things to get through today. So I want to make this snappy. But what the heck happened to the market today? That's part of what's going on. We're starting to see a pretty big sector rotation out of growth into value. But there seems to be a lot of confusion about it. Is it just that people are not ready to give up their tech stocks yet? Let me see if I can get this in the middle here. Is it that people are just not believing that there could be a sector rotation? I understand investors have been calling for sector rotation out of the high-flying tech stocks into value for a long time. It's hard to say for a lot of people that the tech stocks could be overvalued. Because they're such darn good companies and they are the way we're able to work from home and stay at home. But there's more to it than that, because sometimes, stocks get carried away. They're as owned as they could be. So we're going to talk about that. I'm going to give you the update today, and I want you to walk away with an understanding how we seem to be going into sector. Yesterday, we saw sector rotation. It was continuing really nicely this morning, but a lot of stocks petered out in the market. The Dow is up over 200 points. It was barely up for the day. So let's just roll the intro, just a 12, 15-second intro, and then we're going to get into today's show, the big topic of the day. Okay, and we are back. Again, if you're watching this live, welcome. Please hit me up with any questions that you have in the comments. If you're watching this in the replay, I'd like to welcome you as well. Hit me with your questions in the comments. I will definitely get the notification about those, and I can't wait to answer them. I want to talk to you about a couple of things, but everything just got a little bit more interesting. If you haven't heard yet, Vice President Biden, or the Democratic nominee, just picked his running mate, Kamala Harris of California, Senator Harris. And I don't know, I thought that was a controversial pick because she just hit him so freaking hard in the primary debates. But that's who he picked. I guess she's got, the woman, she's African-American. He said he was going to pick a woman for his running mate. I'm all for it, and good. And she is an experienced politician. She is a really solid debater, and I guess she'll be going against Vice President Pence in the debates. I would find it very could be tough to debate her. She's not a shrinking violet by any stretch. She's got prosecutorial experience as well, so she could be seen as a law and order candidate as well, not someone who's overly, not overly left. Is that okay to say? So politics just got a little bit more interesting. So we know that once you come back from Labor Day, we really go into full steam with the election. But it's what, 80 some odd days away. It's getting pretty close. I see that some of you are out there, so I just want to welcome you. Let me just get this right now. Bill, how are you, man? It's nice to see you. Thank you very much. And hope you didn't lose power. Or if you did, I hope you got it back real fast. Scott, hey, buddy. Good to see you, man. Thank you for tuning in. I really appreciate that. So let's just go through the quick update first. And then, we'll talk about all these good things, okay? So I've got a couple of screens open. I don't mean to take my eye off of you. Can't take my eyes off of you. Okay, you don't want me to sing, do you? I've got the mic, though. I could probably do that. I'm just doing the share screen. I'm standing today because it turns out that the yellow shirt I'm wearing, I guess there's green in it, and it completely disappears when I use the green screen. So I'm in front of the brick wall instead, okay? But you can see here the Dow, by the end of the day, just collapsed I mean, this is just a really like a crappy day. What can I tell you? It was a nice day, but we'd have these reversals. I would rather see a down day and recover, obviously, but to see a strong up day and then to take this kind of hit. The reason is, I'm going to get into that. You should know it's the tech stocks, but Dow off 104, S&P hit the skids, Nasdaq really got hit. Russell 2000 got hit. Really nothing, no great shakes. The VIX wasn't up that much. You see the green one, that typically goes up when stocks go down. It's still under 25. You see it's a nice percentage gain in the VIX. Typically the VIX moves in a lot more exaggerated way than the major averages. Okay, so let's just, let me see if I could close that screen. Goldman Sachs raises its economic growth outlook for the year as it sees a vaccine approval coming. But even if we don't get a vaccine, we're still opening up the economy. I think social distancing and wearing a mask is maybe starting to come into vogue a little bit in the regions of the country where the COVID really spread. But we're not going backwards. We're not closing the economy. My concern was that if enough states rolled back their phases of opening or just stopped where they are, that it would interrupt the economy. So far, I could give you an argument for either case. The labor numbers were pretty good, but when I looked under the surface, they weren't so good. So here's the thing. I feel like we are slowly on a gentle glide path to improvement. A very gentle glide path. We've already seen a recovery in the stock market. As of today, I don't know if the S&P actually touched an intraday all-time high or if it just came up to a smidge. But basically, the S&P is around all-time highs. So the whole recovery that we are expecting may already be factored into the stock market. The whole recovery could already be factored in. So now what's happening is, while the stock market stays flat on the surface, the churning underneath the surface is all about sector rotation. And that's when you see, the stay-at-home, work-from-home stocks take a hit and the recovery stocks go up. That was more or less the main story of the day, because even though the Dow went down a lot from its high today, we still had a lot of industrial stocks that were up pretty good. Let's take a look at the Corona stocks. Okay, Zoom down $18. I mean, it's pretty. I mean, yes, the stock is up a heck of a lot. When you lose 7-8% of that trade in a day, especially for the Johnny-come-latelys, that's a pretty serious drop. Clorox down $11. Listen, I know it was just like 198, but still 222. Still up about 10-11% from where it was a few weeks ago, but it's given up a lot of gains. And that's the thing, when these stocks do give up gains, especially because there's a lot of new, there's a lot of new shareholders that came into the Corona stocks just because they're going up. That's called momentum. I actually wrote about this the other day. I said, people who buy on fundamentals typically know what they're buying. Investors who buy because the stock is moving up on momentum, they don't know what they're buying. They're just going with the momentum, not knocking them. But the newer holders are also probably the weakest holders. So your biggest worry right now, your biggest concern, are your fellow Johnny-come-lately investors who decided, hey, I should buy Zoom at $230 because it's been so good. Okay, that's what you have to worry about. Activision down a couple of bucks. These are big hits. Okay, what else? Campbell's was barely off. Dr. Domino, I almost said Dr. Pepper 7-Up. That's DPS. Domino's up a tad little bit. Okay, let me see if I could change the script. I'm kind of far away from my screens, believe it or not. Okay, let's look at the sectors. Financials are the leader of the day, and industrials. barely. I mean, not a particularly great day. I mean, look, whenever we see industrials up over 1%, that's not a bad day. Financials up rather 1%. Industrials up. The bottom of the pack, toward the bottom, were tech stocks. You don't really see that too often. Just a very mixed day, but more bad than good in this day's session. Let's see what else we have here on the screen, and then we're going to keep this going. All right. We have. I want to show you a little chart here. Hopefully, I didn't mess this up. Hold on a second, guys. Let me just see if I could get this. I know you can hear me. All right. This is the iShares core growth versus core value. And you see that the core growth was way up in the last year. Value did not quite work out as well. That's about as big of a difference as we ever see. And this here is just a 1 day chart, 5-day chart, where you see all of a sudden growth going, value rather rising above value. That's all that really is. And I'll just see if I have my other watch list up here. I know I do. I have the FANG stocks up here. Okay, let's take a look at these. So you see Facebook down over $6, down over 2%. Apple really took it in the chin today, down 3%. It's a big move. Amazon down 2%. Netflix down 3%. It's a big dollar moves too. Google, Microsoft. When you see these big tech stocks go down, and these are just about 30% of the market cap of the S&P 500, you can't fight it. So that's really what pulled the market down. And if these are going down, then you better bet that the other tech stocks, the smaller ones, are going to go down, are going to drop as well. When the generals go down, the followers, the soldiers are going to go down with them. The generals could go up without the soldiers, but when the generals go down, the soldiers go down too. All right, so let's see who else is out there. We have somebody in LinkedIn out there. Love watching your show. Thank you very, very much. Always informative. Thank you. I can't see who you are for some reason at the moment. I just see LinkedIn user. But whoever you are, thank you so much. Really, really appreciate that. Phil is out there, my good friend. How are you, my man? All good. Thank you. All right. Thank you very much. So let's just get rid of the screen share, and then we'll all right, back to me. Lucky you, back to me. You get to see me. All right. So I think the theme today is, how do you handle a day like today? And what we've been talking about here is constantly rebalance, make sure your asset allocation, your portfolio is in alignment with your risk tolerance, your time horizon, your financial goals. It's really very simple. But I felt like I was rebalancing just a little bit ahead of what would have been perfect. I'm not shooting for perfect though. And I actually feel like if we have a couple more days of these big tech stocks going down 3-4% in a day, some more, you might actually start kicking yourself and thinking, I'm late to rebalancing. That means you take some money off your winners, put a little bit of that money into other areas of the market that represent a lower portion of your portfolio than you originally had planned. The theme of today was, is it being greedy to try to squeeze? The theme of today is, let me start it over because I'm tripping over my words. That's what happens. That's what happens when you go live, okay? The theme of today is, it being greedy to try to squeeze every single penny out of a stock. Now, if you're holding on to a stock forever, then it really doesn't matter. But if you are in index funds, for example, I say it's important to rebalance, and it's important to recalibrate your portfolio in a gentle glide path. So when you hit your 60s, 70s, 80s, you presumably want to be in a lower risk profile with your investments. Okay, makes sense, because you don't have the time to recover it, and you're not putting new money into your portfolio, and you don't want to get hit by something called a negative or very poor sequence of returns. That means when you retire and the market goes down, you have to sell more of your shares when you are early on in your retirement, and because of that, you'll have fewer shares working for you for the next recovery, which makes it harder and harder and harder to recover, let alone grow your assets and keep pace or ahead of inflation. Ooh, that was a mouthful. I personally think, though, that if you have stocks, really, I would say any asset class, my own feeling is if you're trying to squeeze every penny out of everything, I do think there's a greed factor there. Now, you could take a look. We could go over all these examples of Amazon and Apple, Microsoft. These are great companies, economic miracles. But there comes a point when you have to do what's right for you. And if you don't do anything, then that is also a decision. Now, if you do nothing, you've made a conscientious decision to do nothing. If you decide to put it off, I'll look later, I don't want to see it, I don't want to deal with it, I'm too busy, I can't think, it's too stressful, whatever it is. There's a really bad lack of discipline if that's the case. And what it means is you don't have to, let's say you have 1,000 shares of, I have clients on some of these big tech stocks and they're way up hundreds of %. At some point you have to say, maybe I'll take 10 shares or 20 shares out of 100 off the table. Maybe you'll take more, maybe you'll take less. But I don't want you to try to squeeze every penny out of a trade, because that implies that you know what the trading top is. You know what the peak price is going to be. How many times have we seen people try to call a top in this market and a top at a particular stock? As you say, market timing is really tough to do. That's why I think discipline, I think strategy is the name of the game. It's about a strategy that works for you that you can stick with. And if you don't have a strategy, you're going to be in a portfolio that you can't stick with. I remember in 2000, last thing I'm going to say, in the year 2000, I remember stocks like JDS Uniphase and other well-known tech companies of the day, AOL, for example. Yeah, AOL was a massive, giant company at one time. And these stocks just tanked. I mean, they went down 80, 90% or more. And people just, didn't take anything off the table. And it got to the point where, clients would call me and say, I like this stock, I like that stock. Just because I saw them go up a lot, or they saw them on TV and they were going up a lot, like, I have to buy this, I have to buy that. And, you hold people off. You basically refuse. I can refuse a buy order. Can't refuse a sell order, but I could refuse a buy order. But it gets to a point where, people get carried away. I think people are better today than they were 20 years ago. But my point is, some stocks are up a heck of a lot. Don't be afraid to take some gains, no matter how good you think the company is. That doesn't matter. When the institutional investors change their mind, it could be on any wonderful stock like a Procter & Gamble, a Pepsi, an Apple. Wonderful companies, but when when the buying turns to selling, and institutional investors say, "Get me out," and you can see these stocks really drop a lot, and then you'll kick yourself and say, "What was I thinking? I should have known better." And you swore that what happened in the year 2000 and what happened in the year 2008, 2009, the years to it, 2008, 2009, you swore to yourself you wouldn't let that happen to you again. So what are you doing about it? If you have any questions about this, you are certainly welcome to reach out to me. We'll talk strategy, and I'm going to end this broadcast now. I am going to see you soon. Thank you so much. You want to see a cute picture? Look, while I have you here, I'll just show you a really cute picture. This is, I made this little outdoor cage for my daughter's bunny. Yeah, we have a bunny. All right, look at this little guy. Can you see that? Can you see that little guy? He loves being outside. All right. Have a nice day, everyone. Thank you for watching. Bye.